Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using and that you're seeing in this live stream / video, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I recommend if you're here for the first time is check out the Elliott Wave principle that you can read online for free when you use the link that's in the description down below. Now, with that said, let's jump right into it. As you can see, we have another pretty much break-even start into the day, so not much changed. Let's hide that message for now. And I don't expect this to be a very long episode because I don't think a lot of things changed since yesterday's episode, but let's take it from the top. So we're going to look at our positions in Barnes & Noble Educational, our GameStop covered calls, Novavax, Grab, as well as Immersion Course, and a few others. Now, it seems like I'm having an issue here because somehow my interactive broker is not responsive now. So we'll have to restart that, unfortunately. Always sucks when things are not working, but yeah, close window, there you go. And yeah, just a second, need that to close. Now we can fire it up freshly again. Closing login window, yeah. Maybe today would be nice. Let's speed that up a little bit. Where are you? Can I find you? Trade station, trade workstation. There you go. And task. There we go. Okay, now I'll just, as I said, need a moment to fire this back up. So trade workstation. And then I obviously need to confirm my login. So much for a smooth start. Authenticate. There we go. So that should fire up that. And once the trade station is up and running again, we can also fire up Motive Wave again. Yeah? So there we go. So yeah, sorry for that unexpected delay. Again, circling back, so slightly break-even starting to the day. Now the interface is responsive again. As said, we're going to look at our positions in course, Immersion, Barnes & Noble Educational, and everything where we have options plays running. Yeah, SPY, also interesting. Going to cover that later. Let's start with Barnes & Noble Educational. Again, I don't expect that a lot changed, but here's where we are. So Barnes & Noble Educational, as I mentioned and explained in some of the previous streams, we pretty much had a nice turnaround at the 61.8 retracement, and from here currently forming the next 5 waves up. Visually, I would expect either this is already the first wave, second wave, or this is 1, 2, 3, 4, and we still get wave 5. Either way, as long as we stay above this deceleration trend line here, there should be more room upwards. So I'm just going to hold on to the few shares that we have there. Because either way, no matter how the pattern turns out, we should reach at least the $14.20 mark. Again, just my personal opinion, don't bet your house on it. And potentially actually at least the $20 mark for the 100% target. Now, yeah, like if you want to know more how this developed, how it was in quotes predicted and whatnot or forecasted, check out some of my previous episodes. And other than that, we are moving on now to the next stock on the list, which is GameStop, which is also unchained. Not unchained, but unchanged. Not much changed. So we still have, unfortunately, both options open. Either we are still within this corrective pattern, which means we would expect a drawdown to $15.30, $15.45 before we see further upward movement, or our correction finished here at this low at around $17. And we are right now already in the next impulsive wave. Either way, the only option we have right now, or at least the only option that I see, is to wait. Either we have a breakout above the 25-24 mark to confirm or provide us with additional evidence that the corrective pattern indeed finished here, or we break to the bottom and get our confirmation that we very likely are going to reach this area here. Yeah, the shares that we got assigned through writing put options, we're just going to hold on to them to see how any of this plays out. And while we are holding on to them, we will just keep writing covered calls like this one. So we get a small premium every week. Basically saying if by the end of the week the price is above $30, we'll sell our shares for $30. And as long as this doesn't happen, we get anywhere from, in this case, what's that, $29 roughly, or $30 almost for a week, which is obviously not a lot of money, but it's better than just holding the shares and getting nothing. Now, additionally, yeah, that's about GameStop pretty much. So unfortunately, both things possible. Grab, also unchanged here. We are monitoring on a weekly chart. We have a so-called Leaps call option that expires in January 2026. So we still have a little bit of time until that happens. And we have our breakout here. We went higher than the high that we had in January 2023 at 404, which means we either are potentially seeing something like A, B, C, which would offer a little bit more upside, or we are actually seeing 1, 2, and we're currently in the process of our third wave, which should take us even higher. So yeah, while it still takes quite some time for our option to expire, that also means there's still quite some time for the price to go higher and therefore make that option trade more profitable. Moving on to immersion, where things are or not fully changed yet. We broke out through this deceleration line here, which might provide additional evidence that finally the corrective pattern finished here. Now, immersion is one of the stocks where I got it wrong twice. So my original assumption was that we're actually gonna have our end of the correction here at the top of the so-called base channel, which also would fit as an ABC pattern, with wave C being 161.8% of wave A. However, then it turned out that we'll get another push down, which makes the pattern more likely like this. And the second time I got it wrong was the assumption that after we reached the 61.8 retracement and touch the 100% expansion level. So the 100% expansion is basically, this is wave A, this is wave B, and then here 100% of wave A is this level. I actually, yeah, like was relatively certain that this might now mark the end of the correction, just to then eventually get this push further down. Now visually, I think there should still be another push down so that we have a 5-wave movement down here, but it's possible that it's not going to happen and that we actually get our upwards movement from here already on. What we'll have to do in this case is, like so often, just wait and see how it develops. Because if the corrective pattern is done here already, then we would eventually break initially the 898 mark, which would make it impossible to, I mean, not impossible unless I'm wrong with my labeling, of course, yeah. So, or impossible unless I'm wrong with my labeling, to get another push down. So if we break the 898 mark here, we have an additional piece of evidence that points towards the correction being over, and we are looking at the next 5-wave impulse up. Looking at Intel, actually interesting to see. Yeah, that's a play that I did slightly wrong, but that was interesting overall. We made an options play, actually. We said Intel will go down, and we did it here. So we got it in 1 day early and missed the spike. And then unfortunately, we picked a relatively short expiration date so that the expected movement did not happen on time. And while this here is 1, 2, 3, 4, 5, we can also see that wave 5 did not reach the target area that we would expect. Yeah. So, however, from the looks of it, it looks like we have now 5 waves, 3 waves, 5 waves, which means chances are, especially once we break 2288. So once we break 2288, chances are that we're on our way for the next 5 waves up. Right now, it's still possible that we get another push down, but visually, I would say it's less likely. However, whoever wants to play it safe would wait for a cross of 2288 and then basically enter at 2289. There would still be the possibility of some weird 1, 2, 3, 4, and then we get wave 5, so A, B, C. But yeah, like there are no guarantees, there are only probabilities. And I think if we get, especially if there is a strong move right now, it would point towards 1, 2, 3, 4, 5 for more upside to come. Moving on to costs. Yeah, like unchanged, we're still waiting for either a decisive move up that breaks the high at 879, to confirm that we're now in a 5-wave impulse upwards, or for a push down that breaks the 50% retracement to confirm that we are looking at a bigger corrective A, B, C pattern that should then at least take us down to the 61.8 retracement level. Moving on to NEO. NEO was one of the things that we got actually quite right. I don't recall where specifically we entered. I think it was during this wave 4, but we got out here, which was pretty much, like calling the top very nicely. And as said, from the pattern, I think we are looking at a 1, 2, 3, maybe not even finished. So I think we will get more correction to come. One could already start to enter in tranches and so on, because overall it looks like 1, 2, 3, 4. And one thing to consider, actually, that might actually already mark an area for entries. Well, it's hard to label this as a corrective pattern. Might be A, B, C, but it's really hard to see the pattern here with the naked eye. We know that very often retracement waves will retrace into the area of wave 4 of the previous impulse wave of one lower degree. Now, if we have 1, 2, 3, 4, the previous impulse wave is this wave 3, and one degree lower means we subdivide it. So this third wave also consists of 1, 2, 3, 4, 5. So the previous wave, or the wave 4 of the previous impulse of a lower degree, is this area here, and which also aligns very well or almost perfectly with the 61.8 retracement, which is also a common area of turnaround. So if somebody would want to, in quotes, make a slight gamble before we wait for a confirmation, then 490 or even the area right now would be reasonable entry points. Because chances are, again, we don't see it visually in this corrective pattern yet, and there is the chance because of that we'll go further down, but chances are, based on the guidelines and things that happen often, that this actually will mark the bottom of this correction, so that there somehow has to be a B, C, or other form of corrective pattern down here. And from here, we potentially, or once we touch the 490, 61.8 retracement mark, or maybe break it a little and then go up. But so from this area here, there is a decent chance that we actually will see wave 5 up, because we're still missing a 5th wave. And even if one is wrong, the stop loss for a trade would need to be at 368, so at the low down here at the wave 2 point. Which obviously has a decent size of risk. But on the other hand, if the correction would already be over, we can use an expansion here from the starting point of wave 3, the top of wave 3, and then our wave 4. So if the correction would be over, we would expect wave 5 to reach at least $7.88. So that's, while not 100% upside, still quite some upside. And the maximum target for wave 5 would be at $10.49, which actually is a little bit more than 100% return that's possible here, assuming that we are already finishing here. Now, if the correction is not finished here and we maybe reach even the 78.6 retracement, we can see how that affects the profit targets for the 5th wave. But we can also see that if somebody were to enter now, like even if we retrace 99% before we start our 5th wave, so 99% in relation to where the stop loss would need to be, we still would be able to finish this trade with a profit. The only way that we don't finish this trade with a profit is if my analysis of the overall pattern 1, 2, 3, 4 is wrong. In this case, we could go lower than this and the trade would trigger the stop loss. But again, so personally, I would still wait, but considering the usual rules and guidelines, right now would not be the worst entry, because this is the previous wave 4 and we are in that area now. Personally, however, if I would consider an entry right now, I would place my entry at the 61.8 retracement level of $4.90. So buy at $4.90. Of course, if we don't touch that level, it's a pity and we could enter a little bit later. But on the other hand, it also means a slightly better entry. In this case, what the 10% would be 50 cents. 1%, so it would be a 2% better entry, not that much better. So yeah, like it would mean 2% less risk if we set the order here. So maybe if somebody considers to trade based on that guideline approach, entering now is not that much worse than risking compared to to potentially missing the entry at all. Anyway, moving on, Novavax, now going down a little bit further. While we would love to see it go up, and technically our entry wasn't that bad with our options trade getting in here, but we should have taken profit or set a trailing stop loss, because obviously our options play that expires here in January is now underwater. I've mentioned it the last couple of live streams already. Visually, I believe there's still a fifth wave to come, which likely would also mean the 61.8 retracement will be hit. I could be wrong, and we already finished 1, 2, 3, 4, 5. But more likely, I think, is the case that we still get another push, touch the 61.8 retracement, and then we get to see the next move up. Now, sorry guys. Now, if that happens like this, the question for my position will only be, will that upward movement happen in time before the option expires or not? Yeah, for shares, I think the recommendation would be to hold. While there could be more suffering to come, I still believe there has to be another wave up, considering that we have a 1, 2, 3, 4. 4 is said maybe not finished. That's why we can go at a little lower, and then wave 5 to come, unless again I'm completely wrong with the labeling. Moving on, what else to look at? Nvidia. There we were actually considering, if we are correcting this entire pattern, we would expect more downside. However, short term, then this would need to turn into A, B, C, which it already could be, because we see that this point here is higher than that point, which means right now there is the chance that on Monday we get our next push down, which would then make the 38.2 retracement our target. The only alternative would be that we're looking at a smaller retracement of only this move here, in which case we already touched the 38.2 retracement and would right now expect the next 1, 2, 3, 4, 5, yeah, which means it's obviously not much of a relevation or a forecast to say, okay, it goes up or it goes down, but it means if we break the 144.50, an entry to the upside makes sense, because then there would be more upside still to come. And on the other hand, if one hasn't entered yet, one could gamble to say, okay, maybe we're correcting this entire pattern, and not even gamble, but say, okay, I'm not going to enter now, but I'll either enter if we break the 144.50 to the top, or otherwise I enter at 133.12, because then we would have potentially A, B, C. If we check that out, so if this were wave A and B and C, then we can see that the 161.8% target would exactly overlap with the 38.2 retracement. And in an ABC pattern, we would expect that wave C usually only reaches the 100% mark, but sometimes may go as far as the 161.8, even pierce it a little, and mark the end of the corrective pattern. So I would say keep an eye on Nvidia, and depending on today ends, if we go much higher, of course, that scenario goes out of the window. And anyway, if we breach the 144.50, one could go long and just have the stop loss at whatever low we had here, for example, or here at 137.46. However, if we today lose a little bit, then chances are that we will get our next wave down in the next week to bring us potentially at least down to 136.94 would be my expectation, but potentially more likely down to the 38.2 retracement, which would then mark a decent entry point. If one wants to gamble, and this time really I mean gamble, one could short Nvidia. Stop loss would need to be at 144.50 or 144.40 is actually the high here. So somehow that point is a little lost. And take profit could then be 139.16 to 133.36. So at some point set a trailing stop loss, and then, or just manually move your stop loss and then take the profit wherever. Yeah, but I think patience and waiting for the long position entry, either once we break the upside or at the 38.2 retracement, makes more sense here. Moving on to, where do we move on? Let's move on to SPY. SPY is doing exactly what we expected, I think, from what I recall yesterday. So on one hand, we covered that Previous move here marks a decent entry point because it's the 161.8 extension. Again, wave A, wave B, and wave C, which exactly 161.8. We mentioned that we should wait for a breakout from this. Now, what are you? You should be a deceleration trend line or not? Or are you something else? Yeah, so we mentioned, now come on, give me that. Can I please select that? Yeah. We mentioned that we should wait for a breakout from the deceleration trend line, which we now have, which means that's confirmation that we should go up from here. Now, in addition to that, here we have basically our wave 1. Wave 2 retraces 61.8%. You can see this mark, 38.2, 61.8. They repeat very often and very often mark good entry points for catching a correction or the end of a correction, which means here we are looking at the next 1, 2, 3, 4, 5, which also means we expect quite some upside here. Now, personally, I missed this trade. Yeah, it just is what it is. I don't always catch the movements during the streams. I will not jump in right now. Our profit target here, however, as you can see, would be the first one basically at 585, and the real one would be at 592. So you would expect 1, 2, and then this here to also play out as a 1, 2, 3, 4, 5, wave 2, wave 3, wave 4, wave 5 to take us up to 592. So yeah, like the stop loss could be somewhere a little bit below the deceleration trend line. Looking at an hourly chart, we would expect that we may get a retest of this trend line, so that a better entry might be possible. It does not have to happen, however, so we can also just leave that trend line behind us and move on from here. Either way, visually, we can see, even if we look at the moving averages, we can see our 1, 2, 3 actually goes till here, and then 4 is basically A, B, C, and there we are now looking at 1, 2, 3, 4, 5, which will mark wave 1. Then we get wave 2, wave 3, 4, 5, and so on. So there is more upside here to come, especially since we're considering 1, 2, 3, 4. And now that we have more or less our confirmation that we are now potentially in wave 5, we're also in wave 5 for a bigger pattern that already has a higher profit target. But if we look at this here, we can see that if we consider this third wave, so again, third wave from here to here, fourth wave, we get the minimum target at 595 and the maximum target, the minimum target at, am I dragging the right one? Yeah. Minimum target at 587 and maximum target at 595, which would be fitting with 1, 2. Third wave goes till here, 590 to 592. Then we get our fourth wave, and then we get our fifth wave here, and then we get the next corrective pattern that potentially will bring us down into this area again. That's SPY, and then with that we can finish by looking at the Nasdaq, where, surprise, surprise, we actually yesterday, no, not yesterday, 2 days ago, yeah, like 24th, yeah. So we finished our wave C here. Oh, yesterday we noticed that it played out the way we thought it would. And so we have wave A, wave B, wave C. Wave B is A, B, C as well. And we hit our 61.8 retracement, again, very common level, which is also the 100% expansion level for wave A, B, and C. And from here now, we are apparently going up in the next 5 waves. So again, there's more upside in the Nasdaq to come in the next couple of weeks as well, or days, yeah. For at least wave A, wave B, wave C, which has a minimum target here. Minimum target here, minimum target was here. Expected target 21,000. If this is A, B, C, and here within that pattern, 1, 2, 3, 4, 5. We are still expecting more upside, and within the smaller pattern here, no, that was the downward labeling. That's the retracement that we labeled. So yeah, that we didn't. Okay. Yeah. So overall, long story short, Nasdaq more upside to come. So in the Nasdaq, I expect that we will see at least the 20,700 or the one, or actually more likely a higher level. From the looks of it, I said we have a very nice ABC pattern that follows all the rules and whistles. Therefore, yeah, there might be intermediate corrections. If somebody were to enter now, stop loss could be at 19,934.92. And as said, take profit anywhere 20,742 or higher. And yeah, that pretty much sums it up for today. I'll have a bunch of other things already on my schedule as so often. For me personally, obviously, the only thing to do is wait and see how our positions pan out. Unfortunately, or fortunately, depending on how you look at it, a lot of our capital is currently already bound in existing positions. So while I see a lot of potential good entries, or that I shared with you during this episode, I cannot take them because of the funds already being tied up. But I'm also positive that giving a little bit of time, we will get out of some of our positions, and with that have some disposable trading money again to actually take action on some of the patterns that we are currently just monitoring. I hope you were able to take something away from today's stream. Don't forget, obviously no streams on the weekend. I'm not sure yet about when the stream on Monday is, because we have our time switch, so summer winter time switch this weekend, and I'm not sure when that happens in the US. I will have to check, so that on Monday I actually stream again 5 minutes before market open roughly. But I think there is a 2-week difference between when the US switches the time and when we are switching the time. So I believe that for the next 2 weeks, the stream will be an hour different. And then we'll get back to the same time that we have now. But basically, we're going based on US time, based on the NASDAQ market open. Now, don't forget, give the video or the live stream a thumbs up, helps me a lot. Like, subscribe, enable notifications, basically, and so you don't miss out the future live streams. And with that, I want to wish you all a very, very pleasant weekend, and then see you all Monday with another episode of Daily Market Mastery. Till then, bye-bye.